Mic on.
Hello traders and welcome to October's non-farm payroll release. My name is Richard and I will be your host for this session. Welcome to Orbex live webinar today. So basically today what I'm gonna do is, with the help, with your help of course, we'll analyze technically the non-farm payrolls release, and I have here the dollar index in front of me on the 2-hour chart, right? So what we're gonna do today is mostly, firstly, I'm gonna discuss a bit about the non-farm payrolls. For those of you who do not know exactly what the non-farm payrolls are, this is a release, a news event in which jobs in the government sector are actually displayed. So with the help of the economic calendar, we can actually see here on the Orbex blog what analysts are forecasting, right? What's expected. So we do have, let's say, for instance, a forecast of the unemployment rate of a decrease for 3.8 versus the previous 3.9. So this is a bit, let's say, bullish, I would say, right? And the non-farm payroll is expected to decrease in the numbers of the jobs added in the government sector, excluding the farming industry, of course. So this is quite, let's say, for instance, quite a difference between the previous release of 201k. So expected 160k, which is, let's say, for instance, bearish. So far we have mixed data, yeah, towards somewhat of a bearish possible outcome. And the average hourly earnings, which in my personal opinion are a bit quite, I mean, quite important according to what I'm seeing on the technical charts. We have an expectation of 0.1% versus the 0.4 percent, and this is quite bearish again. So two VS1 releases right here, yeah, for this release. Now the release will occur exactly at 3:30 p.m. Eastern European Standard Time, which is my current time in Cyprus, Limassol, and so basically in 26 minutes, so something like that. So let's say, for instance, in the meantime, until then, what I'm going to do is, obviously, I'm going to go on my charts right here and explain to you guys a couple of things, okay? But before I do that, I'd like to let you know that everything that I'm about to do or say is not implied to induce you or influence you in any way, and this is just to be treated as simple market commentary. This is not an investment advice. Now that we got that out of the way, before we get started with the charting. So technical analysis would take place, of course, before, during, and after the release. This webinar is being recorded. It's also being streamed live on Facebook and YouTube. But at one point, let's say, for instance, after the release, the Facebook live session will be interrupted, and also the YouTube one. So practically, the ones who are actually inside the room in the webinar will actually continue there. So there is a registration link on Facebook and YouTube. Should you wish to continue further after the release, of course, then I will really get charting, and I will have many more, I mean, a bit more clearance, let's say, on the actual analysis. And yeah, we'll get closer to it. But not to mention that I have a lot of things to discuss, such as the Elliott Wave ebook part 4, which I'm going to give a few details about, but also something that actually happening with the volatility index, possible spike being around the corner. Just saying, we'll see if it could or would occur. So I'm going to give more details on this Dow Jones 104 years chart from 1914, right? So will be interesting right here, because I do see a possible end of a bull market, not imminent, but this is the actual trick. I'm gonna go on the Dow Jones chart, and also S&P 500, Nasdaq, and also DAX. But also we'll go through the metals a bit, and forex pairs, majors. So we have a lot of things to do. Okay. Now, let's say, for instance, before the actual analysis, I'm going to go on these charts and these patterns. I'm gonna go on the dollar index on the, let's say, from daily, the daily charts, and I'm gonna have daily charts. Most of the charts on the short term will be on the 2-hour time frame. So I'm gonna go on the dollar index, gold, silver, WTI, crude oil, Euro USD, pound, dollar, dollar yen, Swiss franc, let's say USD Swiss, Aussie, Kiwi, Euro GBP, the CAD, USD CAD, because simultaneous releases will occur today, and I do see something interesting on the USD CAD, which I want to share. The yen against the euro and the pound, and also some indices such as the CAC 40 DAX, and of course the stars of the day, the Dow Jones and S&P 500. Yeah, so I have a lot of things to discuss with you guys today. Now, in the meantime, as I said, this is being recorded. For those of you who are inside the room, if you have any questions, just use the question box right there. I will take my time, I mean, from time to time, to respond to your questions, right? Such as, let's say, one is happening right now. This are going down, so GBP will go up. Well, that's what we are going to discuss more with this analysis, and according to the actual release, we'll have more details, because I'm actually seeing this particular NFP, the non-farm payrolls release, as a very important event, because it's actually synchronizing with the possible completion of a pattern on a technical, on the technical side. So somewhat the technicals might be aligning with the fundamentals. So we could have something, something to actually take a look at with a, to analyze, right? So. So before we get started with that, I'd like to give more details in regards to the Elliott Wave ebooks, right? So let's say, for instance, in the room, there are some handouts out there, which are the Elliott Wave ebooks parts 1, 2, and 3. Part 4 is reserved for live account holders. So if you do wish to receive the part 4, which is in my opinion the most important one, because what is an Elliottician without his patterns, right? So know your patterns. So that's why this part 4 contains multiple patterns in corrective structure types, such as you see the zigzag, right, and how it behaves, how it occurs, when it occurs, the rules and guidelines, how it acts like a bridge between combinations, what type of double, triple zigzags, etc. The flat, just similar to the zigzag, the simple flat, expanding flat, and running flat, with all these details right here, and how they should be measured, predicted, etc., and how you guys should take a look at. Double, triple freeze, of course, has combinations, explanation for the flat, and how it acts similar to the zigzag as a bridge for WXYs, WXYXZ complex structures. And let's say further on, the triangle patterns, and the most common running triangle, yeah, and combination, of course, with explanations right there and examples, yeah. Fibonacci measurements on waves, specific waves on motive impulses, which either include or do not include an extension. However, for motive waves, of course, the law of alternation and alternate counts as well. So giving that said, we'll actually give a few more details, and why somebody should actually open that live account, get the part 4. It's not only to get the part 4. Those of you who actually have a live account, you are actually entitled and encouraged to contact your account manager to schedule, book a session with me, a private session, let's say, so we can actually share some thoughts, yeah. But also, you'll get exclusive access to the advanced sessions with closed doors only for live account holders, for the Orbex traders, right? So, with that being said, what I'm gonna do right now is I'm gonna post you some links for you guys, yeah, with the recently, let's say, one of the link contains the Mastering Elliott Wave revision webinar done a few days ago, in which I'm actually sharing some thoughts with the traders. So I'm just gonna put it in the in the webinar right there, okay, in the chat, okay, and send you guys some links. Yeah, one of the links, as I said, is the recording for the Mastering Elliott Wave live webinar, and the other one is a link in which you guys can actually assess your knowledge, like a self-test, a survey, a quiz, right? In which you guys can actually answer some questions. Obviously, the questions are from part 1, 2, and 3, and you already have them there. Okay, so if you guys need to, I mean, want to learn more, then of course you should take that test just for your own assessment, right? Not only that, but for those who actually get the part 4, there is a final quiz and a more important quiz. Let's say this one is just for your self assessment. But of the final quiz, after the final quiz, those who pass actually get a certificate from Orbex. All right. So basically, that's what I wanted to say in regards to the part 4 for the Elliott Wave ebooks. All right. So let's get charting, shall we? Now, what I have in front of me is the dollar index on the 2-hour chart, and what I'm noticing is, let's say for instance, I have here labeled a 5-wave sequence in this A, right? And then a corrective sequence under an expanded flat, because this level basically goes lower than the start of that move, and this move goes higher than the end of that move, right? So we have ourselves here a possible expanding flat on the dollar index on the 2-hour chart, in which of course a possible, let's say, confirmation for this technical setup would be, or could be, let's say for instance, a drop and a possible bearish breach, after which a corrective pattern could give more indication for the downside. Now, the interesting part about this is that this pattern also shows a bearish, possible bearish divergence right there, okay, in which it could be quite dangerous for the US dollar today. So we'll basically see more details and possible confirmations after that release. Not to mention that, let's say for instance, we've hit the golden ratio right here for this B wave. So we have an A, and the B wave actually retracted from the 61.8, the golden ratio on the Fibonacci retracements. Not only that, but we have, let's say, with the Fibonacci extensions from W and X, we have a projection of 161.8. Now, if this wave is actually extending just a little bit more, let's say for instance, right, this would need to gain support right here and shoot for the upside for a retest of the 200%, aligning with the 78.6% right there, after which a more probable bearish divergence would actually take place possibly. So yeah, we have ourselves something to take a look at. But one thing is, I mean, more clearance can be given should this dollar index, breach that trend line, because it's an important trend line if you ask me. So next, let's say for instance, I have the gold right there. So the dollar index, let's say for instance, even when it actually topped out right there, I was actually present, with that specific move on the downside, and also present somewhere around there with a continuation after that, thinking that it was a wave 2, but then of course the structure became more and more complex, so I decided to label it as an ABC. Alright, so right after that, let's say for instance, when I noticed this type of pattern, I was paying attention for the upside. All right, so it seems to me like the pattern could be complete, and the preferred scenario, in my personal opinion, would be or could be a bearish outcome for the dollar today. But that of course depends on the actual news. We have 14 minutes left until the release, so I'm gonna go on the gold chart, and as I actually mentioned, shown you guys before, I was paying attention to these charts, right? I mean, I was present right here with some views, but also let's say for instance somewhere around here, yeah, with this with this for gold, the gold view in which I'm mentioning a possible bounce off, right? But this setup was obviously followed up right after that. So I just loaded the new bars, right? So let's say for instance even here, yeah, even here, but all the way like you guys know me, those of you who are following me know this views which I actually have, right? So I was actually expecting more of a bullish outcome for gold, but it seems to me like um, it's having quite difficulties, but still I'm looking at this as a possible corrective pattern, even if it's complex. I am labeling it as a WXY, a double free right here in the double zigzag right here, so W and then X with a complete pattern right there, then another pattern right here. Yeah, so I don't know, it's a bit complicated, right? And the way it started right here, it doesn't really have a clean move on the upside, but this looks a bit promising. Let's say for instance, should this one break right here, so those of you who are conservative, you could wait a bit for a confirmation, right? If this breaks on the upside. However, if this actually drops, then 161.8, which is 1172, let's say for instance, which is aligning with the 78.6 of the A, right? To actually finalize this B, could be in focus. So we'll see whichever the case, right? As for silver, knowing what I'm seeing, I mean, I'm seeing a possible volatility spike, and I'm gonna go on the VIX chart, the volatility index, to note a thing or two and to let you guys know on what I'm actually seeing possibly occurring in the markets. I actually discussed about this before it actually started in the previous webinar, on the educational webinar on Elliott waves and the ebooks, etc. So yes, something has started. Indices are actually looking a bit. Let's say for instance, if I would go to on DAX right here, um, I have a pretty bearish wave count on DAX, but also on the Dow Jones and S&P and Nasdaq. Okay, so silver, knowing silver the way it moves, it could have a surprise. So I'm actually let's say for instance, the only thing that it could do is gain support right here. It's either now or it's after that it could actually form a new low. So not looking at it right now with so much interest because the pattern is still somewhat incomplete, right? Um, okay. You have a live account. How do you obtain part 4? Contact your account manager, please, and it shall be taken care of. Don't forget to ask for your private session with me. Yeah. What oscillator am I using? I'm using this oscillator is called. It's modified by me. Um, it's called a bull trading Elliott wave oscillator, right? If you're on this charting station, message me and I will give it to you, right? So you don't think you will go up directly? Well, let's take a look at it, right? Before we do that, we'll take a look at crude oil, let's say, because I'm seeing a possible double top right there with a possible let's say an A and then a complex structure with a false breakout right here in a triple free, yeah. So WXYX and then AB with a ending diagonal, I mean not ending diagonal, but a proper impulse on the C wave with a bearish divergence at the top, right? So we'll actually see if this setup would pan out nicely. Okay, so we'll actually see more details a bit later on. But for euro, right, it's pretty interesting because similar to the dollar index, we do have a pattern in front of us. Okay, so we have after it bottomed right there. Okay, and this was pretty much, right here, this was pretty much seen in advance by yours truly, and boom, started bouncing, bouncing on the upside, right? And after that, after it actually bounced, it actually formed a pattern. So this was either a one, right, and this was supposed to be a second wave and a rally, but it did not give that. It actually started a complex structure. So the way it developed in time, yeah, this cannot possibly be a wave 2, and I'm labeling it as a wave A. Okay, so with a complex structure, so we have an A, then we have a triple free right here in the B, exceeding the start of A, and basically the C wave exceeding the end of A, which makes it an expanded flat, mirroring the dollar index. All right, but the interesting part right here is that this pretty much looks like an ending diagonal in the C wave. So we have 1, 2 in an expanded flat as well in 2, then 3, 4, and then the possible ending diagonal in which, let's say for instance, but the thing is that it already met the Fibonacci extensions from the low to the bottom right here, also hitting the 61.8 and bouncing off immediately with this. Okay, so the only thing is, if this breaks, then it could give more details if it makes some sort of a bull flag right here for a possible continuation, and who knows, maybe a rally. Because if I go on the daily chart, right, for this, let me just bring it up here. Yeah, right here I've noticed a pattern on the Euro USD, a fractal pattern, right, which was taken from this, right, from right here all the way, I mean from March 5th 2015 until December 2017, right? And before it actually started, right? So right then I actually took that pattern as a fractal pattern, in which I'm saying that the Euro USD could actually bounce, even though multiple analysts were actually saying that this could be quite bearish because it broke through the support. Well, I've seen a possible corrective pattern right there, and I actually mentioned it right there and then. Okay, so anyway, let's continue. Right, we do have 6 more minutes until the release. So the outcome so far for the euro, in my personal opinion, could be, let's say, we could have a bullish outcome, right? We'll see if that occurs. Let me just answer some more questions. You're welcome, Marianne. Okay, after correction, the XI changed to go to up. Well, yeah, well, interesting, right? This is the point. Allow me to do that again. Okay. So what I'm gonna do is I'm gonna do the following thing. I'm gonna take this pattern, yeah, until current times. Actually, let me see. Let's take the whole thing. Okay. I'm just gonna take it, yeah. And what I'm gonna do is I'm gonna place it right here, and it's pretty amazing, right? Look at this. It's a fractal pattern, right? This is how this is what I used to determine whether or not the euro would actually rise. Okay, back here at the bottom. So let's see. According to this, the euro should bounce on the upside soon, right? So let's say, for instance, then we had a rise, yeah, then a drop, and then a higher point, drop and higher point. They don't have to necessarily be the same, but what I'm saying is that these fractal patterns, they are repetitive patterns. They reoccur, they reappear under a smaller or larger scale. Okay, so let's say, for instance, another drop, yeah, right here, then a rise, then a drop, then a rise, and some sort of a complex triangle right there, some sort of a complex triangle, and then another drop, right? And this is what I use. Now we had a rise, we have a rise, we have, after that, we see a corrective pattern, even though this could be either a running flat or a 1 2 and then 1 2 and an extension, right? We do have a pattern here to take a look at. So this is an expanded flat, as I said, could be an expanded flat, nothing is for sure. We do have some bearish volumes, but a bullish divergence, a bullish divergence would be nice to see, right, for a possible outcome on the upside, and who knows if this could be extended, because what I'm actually seeing as a possibility could be a head and shoulders formation somewhere around 120 or 1215, right? So these moments are quite important, quite interesting, I would say. Yeah, and if I take a look at gold, well, on the daily chart, the way I'm labeling this entire structure is in a flat. So we have this point did not hit a higher point, and which makes this case it needs to basically exceed this to complete this flat, but it's a complex structure, and I will explain to you why, because this pattern is the most complex one. So we had the first parabolic move. Obviously, you would expect like this to occur, okay? But this is a complex structure. This is an even more complex structure because it corrects a corrective, so hence the reason for the conflict of degrees, and then another complex structure. And this is where the VIX, this is a zone when the VIX previously spiked in February. Right, and I'm gonna expand more on that with the ones in the actual room. So it actually dropped, after which it bounced, and I explained to you how I was, what I used, and what I've seen. All right, that and forming a corrective pattern right here on the daily. And who knows if it would want to retest December 2016 and December 2015 lows, because this weekly trend line has been broken right here. So I would actually, let's say for instance, I would not be surprised to see a retest before a rejection and then a bounce off, right? Now we don't have enough time, so what I'm gonna do, I'm just gonna go to the economic calendar and expect the release to happen. Okay, so we do have, let's say, 2 more minutes, 1 minute actually, right? Let me just refresh this page, and we would expect the outcome, right? Now before, until then, let me just let you guys know what I'm seeing on the dollar CAD, and this was actually posted right there and then. So will you be trading the NFP scalp? Elliott wave is not really used for scalping, unless you're using a very small time frame, but that's a lot of noise there. Anyhow, no, I'm not that type of analyst, and I would prefer to take a look more into medium term. Let's say, for instance, something more. Scalping is not something that I'm actually focusing on in particular, at least not like this, okay, or not live or something like that. So let's wait for the release, and we do have a bad NFP, so less jobs added, higher average earnings, and a very good unemployment rate, which should make things interesting, right? Now we'll see the reaction on the dollar, right? And we'll basically we need to give this some time, because some of the times the movement doesn't necessarily occur right there and then. The market participants actually need to digest that release, and most of the times I would actually say that on Mondays and Tuesdays the real moves actually occur, right? Nothing happened. Yes, you're right, Prem. Waste of energy. No, not necessarily, because right now is the best time to analyze, right? Noticing the NFP, the past 3 releases, no major move actually occurred right there and then, but it did give a good indication for the actual future outcome. And those of you who are following me know exactly what I mean during these patterns, right? Because I've called all of them. The past fifth of 5 of them, at least. Anyhow, let me just go on Dow Jones, right? Because I'm curious to see it, right? Now the point is that Dow Jones, after the VIX spiked, and allow me to go on the VIX to show you something, okay? Now let me just make some adjustments. All right, there we go. Okay. Now the VIX, for those of you who do not know what the VIX is the volatility index, also called as greed and fear index, when volatility where volatility is actually measured, and it's not it's not a normal chart like when it goes up it's bullish. It's actually the other way. When it goes up, it's sellers are more active because the fear period kicks in after the greed and complacency period is done. So we have here, let's say, the spike in February, in which obviously the Dow Jones lost 3,500 points. Yeah, so if you ask me, that was the worst. That was a very bad outcome, I would say. Yeah, in just 2 weeks, it lost 3,500 points. So what if this thing actually decides to spike again, right? And remember, it's a C wave. It's not just a normal wave, both for Dow and both for this VIX. So the way I'm labeling this is as a intermediate A on the upside, then the corrective B, and I am actually looking into this more, if should this actually spike, because the indices, the US indices and also DAX are actually showing some patterns. And now allow me to explain to you what I'm actually seeing. So I'm labeling the Dow Jones on the 4-hour chart right here in a corrective fourth wave of a primary scale, with intermediate A red representing the February drop, after which labeling the B wave, right, with exceeding the start of A, which makes it a flat, in a double free with a W with overlaps right here, and then X and then A B in a running flat. Okay, and then the C wave of the of terminating B and terminating Y in an ending diagonal 1, 2, 3, 4, and then 5 with a bearish divergence at the top. So this could be a unicorn. Now, or unicorn at the end of the rainbow, right? Let's say, for instance, after which it could actually form some sort of a head and shoulders formation at or around the 26,750, but we'll need more details. And by that, what I mean, a continuation in the VIX to possibly confirm this view. I mean, a breach right here, yeah, and a possible bearish setup. I would like to see a simple move should this scenario occur. Simple move in a second wave. For those of you who know what I mean by that, congrats on that. If not, then grab those ebooks. They're actually handed out for free right there in the webinar. And the S&P 500, I'm labeling it the same. So the same structure with an ending diagonal right here as well. However, something interesting is happening, a possible break of the ending diagonal, right? So normally after a breakout, you would expect this to try to re-enter it and, getting rejected, bumping its head and continuing the outcome, right? So bearish volumes are actually, showing up right here with a continuation, I would say. So it would be quite interesting, right? Okay, now next it's the Nasdaq, and this thing was hit a few days ago with some news on China possibly hacking into the Amazon and some things with the microchips, etc. But enough about that. I'm not really a fundamental analyst. I like to take a look at my chart and see what's in front of me. So how I'm labeling Nasdaq is being one step ahead, yeah, with a running flat here in this primary 4, but most importantly, it's possibly ending with an ending diagonal as well, but I'm labeling this as a prolonged ending diagonal in the fifth wave. 1, 2, 3, 4, 5. Third wave is not the end, not the shortest wave, by the way, for those of you who are asking. And let's say, for instance, we have a drop, after which it looks like it was trying, but getting rejected once more. Okay, and would be curious to see what would happen right there and then. So a simple way to know would be like this, right? In a normal flat, for instance, if I use the Fibonacci extensions, something lower than this point, yeah, would actually give more details, yeah. But if it drops even more, right, then another corrective pattern could pave the way for more, even more downside. If, right? So you guys need to take a look at that. I'm just sharing with you my own opinion, of course. Let's see if we have any more questions here. Yeah. Okay. Well, yeah. Well, no moves. Let's go back on the dollar index. Yeah. Now the way I'm labeling this dollar index is in a corrective piece on the upside. So to answer that previous question, after a drop would be expect a rise? Well, my wave counts are actually pointing towards that, yes. So nothing is for sure, of course. As I said, this my views are to be treated as a simple market commentary and not as an investment advice, surely, right? So let's say, for instance, now you see the market right now is digesting these moves, so that's why I wanted us to leave this a bit, yeah, and for people to actually digest it and the market to digest it. Now let's take a look at the euro, okay, because you see the euro, I was labeling it in an ending diagonal, so should this drop, yeah, a little bit more, then I would like to see a bullish divergence. The only condition would be for volumes not to be lower than this previous points right here. Okay, so giving a bearish divergence, let's say for instance a lower point lower than that point with higher volumes. Yeah, for that, so a bearish divergence. Bullish divergence. Sorry about that, guys. So it's we'll be looking for a bullish divergence, okay, like right here. Now, the pound, however, seems to be a bit one step ahead of the euro. So the pound dollar, right here, looks to me like it's possibly has formed a leading diagonal right here, either a one. Yeah, I would label it as a one. So what I would like to see is a simple move, like a zigzag right here. In this correction, should this correct, okay, because it broke out from that ending diagonal, so it could be a bullish sign right here. Now what I'm trying to say is that should the next trading days provide a simple correction, either a sharp correction or a zigzag or a simple flat, something like that, yeah, on the smaller time frames, that could be a continuation sign for the upside, right? So we'll see whatever the market actually gives us. Now looking at the dollar yen, how I'm labeling the dollar yen is still in a B wave right here, because of how this pattern actually unfolded right here with a rally in the C leg, right? So we have 1, 2, then 3 in an impulse, yeah, with a channel, and then the retracement wave 4 and the fifth leg resembling wave 1 in dimension and length, yeah, in duration and length. So right here, what I would like to see is this as a second wave correction, possibly giving a head and shoulders formation, and we'll see if this continues on the downside. The dollar Swiss, however, is different because it's actually still, in my opinion, still in that impulse. So I would be curious to see what happens right now, yeah, at this 200%, but still 161.8 of this 1, 2 to end the third wave would be quite interesting, right? Because I'm labeling it in a proper impulse with an extension. Yeah, and this pretty much says something. So if the dollar index actually manages to to go on the upside, I wouldn't be surprised. And the next levels to take a look at would be, of course, as I said, 200 and 200% on the Fibonacci extensions and 78.6, right? Because this is a vibration zone right here. And that's when everything actually started. So the market, what's most probable to do is to retest if this would be destined to drop, right? And yeah, now Aussie dollar, honestly, I was expecting more of a power from the Aussie. It's still correcting, still more bearish outcome, let's say, for instance, but it is providing um, some signs that this bearishness could be ending quite soon. So all this needs is a little bit of sideways move in the fourth wave, after which another drop to provide a possible bullish divergence. So this one needs a little bit of patience. So does the Kiwi NZD US dollar. Okay. Yeah, if you guys have more questions, then shoot them there. Okay, now what I'm gonna do is I will need to, and I do apologize in advance, I would need to end the Facebook live and the YouTube live. For you guys have some for those of you who are viewing me from an Orbex this Orbex webinar from the Facebook live or YouTube, you are kindly asked to click on the registration link and join the webinar in progress. Yeah, so we'll see